Do you feel uncertainty in the air? Economic news can be overwhelming, but you don't have to be a victim of circumstances. Now is the time to take control of your financial future. A recession isn't just a buzzword, it's a significant economic contraction. It's technically defined as 2 consecutive quarters of decline in gross domestic product (GDP). This means less production, less consumption, and, unfortunately, fewer jobs. Recessions directly impact your wallet. They can lead to layoffs, reduced wages, and difficulty paying debts. For novice investors, workers, and young adults, understanding this is the first step to protecting themselves. The IMF has issued a serious warning. They project that a third of the global economy could enter a recession by 2024. Global growth will slow, marking its slowest pace since 2008. This is not a prediction to ignore. Trade tensions and geopolitical uncertainty are creating a volatile environment. It's crucial that each of us prepare with sound economic planning. Preparation is your best defense. It's not about panicking, but about acting intelligently and foresightedly. Every step you take today will build your resilience for tomorrow. The first step in any financial planning is knowing where your money goes. A detailed budget isn't a restriction, it's an empowering tool. It allows you to clearly see your spending habits. Identify your essential expenses: housing, food, transportation, healthcare. Next, look at unnecessary expenses: subscriptions you don't use, frequent meals out, impulse purchases. Create a budget using apps, spreadsheets, or even a notebook. Categorize each expense to understand patterns. Ask yourself, is this a need or a want? Eliminating unnecessary expenses frees up valuable capital. This money can be used for your emergency fund or to reduce debt. Every euro saved is a step toward greater security. An emergency fund is your financial lifeline. It's a sum of money set aside exclusively for unexpected events. Think about job loss, a medical emergency, or an unexpected car repair. The ideal goal is to have between 6 months and a year of your essential expenses covered. If this seems overwhelming, start small. Every small contribution adds up and brings you closer to your goal. Keep this money in a separate, easily accessible, and secure account. A high-yield savings account or money market fund are excellent options. Avoid investing in volatile assets. This fund will give you peace of mind and prevent you from resorting to high-interest debt in times of crisis. It's the foundation of any solid financial education strategy. Relying on a single source of income is risky, especially in uncertain times. Finding ways to diversify your income is a proactive and very smart strategy. Consider a secondary or side job. Hustle. You can offer your skills online, give private lessons, work as a freelancer, or explore the gig economy. Think about what you're passionate about and how you can monetize it. Develop new skills that are in demand in the market. Continuing education not only makes you more employable, but also opens doors to new income opportunities. For young people, adults, and workers, this can mean the difference between surviving and thriving. Don't underestimate the power of having multiple streams of income. Liquidity refers to the ease with which you can convert your assets into cash. In a recession, having quick access to money is crucial. Keep a portion of your savings in liquid assets. In addition to your emergency fund, consider having 6 to 12 months of expenses in assets you can quickly convert. This could include savings accounts, money market funds, or short-term certificates of deposit. Avoid having all your capital tied up in long-term investments that you can't sell without significant losses. Financial flexibility allows you to react quickly to economic changes. Good liquidity management gives you options. You can take advantage of opportunities, cover unexpected expenses, or simply have the peace of mind of knowing your money is available when you need it. High-interest debt is a drag on any economy, but it's especially dangerous during a recession. Credit cards and personal loans can quickly accrue interest, trapping you in a cycle. Prioritize paying off these debts. You can use the snowball strategy, paying off the smallest debt first to build momentum, or the avalanche strategy, paying off the highest interest debt first to save money. Avoid taking on new debt. Before making a purchase, ask yourself if it's absolutely necessary. Differentiate between needs and wants to stay on top of things. Reducing your debt not only saves you money on interest, but also improves your monthly cash flow. This gives you more freedom and reduces financial stress. A cornerstone of financial education. In times of uncertainty, protecting your financial identity is more important than ever. Fraud and identity theft can wreak havoc on your finances. Consider freezing your credit report with the major credit bureaus. This prevents new accounts from being opened in your name without your consent. It's an additional layer of security. Regularly monitor your bank and credit card accounts. Review your statements for suspicious transactions. Set alerts for any unusual activity. Maintaining a good credit history is vital. Even though we're in a recession, good credit will open doors to future opportunities, such as loans with better rates if you need them. For novice investors, a recession can seem terrifying. However, it can also present unique opportunities. The key is diversification and prudence. In times of high inflation and volatility, traditional assets can suffer. It's time to consider options that have historically acted as safe havens. Gold and silver have historically been hedges against inflation and economic uncertainty. You can invest in them through ETFs, exchange-traded funds, or, if you prefer, in their physical form. Do your research and understand the risks. Stablecoins are digital assets whose value is pegged to a fiat currency such as the US dollar. They can offer a way to store value digitally without the volatility of other cryptocurrencies. However, regulation and security are aspects to be considered with caution. Real estate in stable markets can also be an option. If outright purchase isn't feasible, consider REITs, real estate investment trusts, which allow you to invest in property portfolios without the need for a large initial investment. Never put all your eggs in one basket. Diversification is key. Distribute your investments across different asset types and sectors. This reduces the risk that a decline in one area could severely impact your entire portfolio. For novice investors, starting with diversified index funds or ETFs can be an excellent option. Consult a financial advisor if you have any questions. They can help you build a portfolio that aligns with your goals and risk tolerance. If you're an entrepreneur, a recession is a challenge, but also an opportunity to innovate. Adaptability is your greatest asset. Reinvent your business model. Focus on products or services that meet basic needs or offer solutions to urgent problems. People will always need food, shelter, and efficient solutions. Embrace flexible business models. Remote work and automation can reduce operating costs and increase efficiency. Explore new technologies that can optimize your processes. Stay agile and willing to pivot. Market conditions change rapidly, and your business must be able to adapt. Listen to your customers and be responsive to their changing needs. Take advantage of government programs to support small and medium-sized businesses. Many governments offer grants, low-interest loans, or tax breaks during recessions. Research the options available in your region. Knowledge is power. Monitoring the economy allows you to make informed decisions. However, it's equally important to stay calm and avoid panic. Pay attention to key economic indicators. Falling GDP, rising unemployment, extreme inflation, and volatility in financial markets are important signals. Don't be fooled by sensationalism. Seek out reliable sources of economic news and analyze the data critically. Understanding the big picture will help you anticipate and react. Financial education is an ongoing process. The more you understand how the economy works, the better prepared you'll be for any scenario. Panic can lead to impulsive and damaging financial decisions. Stay calm and trust your plan. Remember that recessions are cyclical and the economy eventually recovers. Focus on what you can control: your spending, your savings, your debts, and your investments. Preparation gives you a sense of control and reduces anxiety. Surround yourself with a supportive community, whether it's friends, family, or financial advisors. Sharing experiences and gaining different perspectives can be invaluable. Economic uncertainty is a reality, but your preparation can be your greatest strength. Don't wait for the storm to hit. Build your shelter today. We encourage you to take immediate action. Create your detailed budget, download an app, or use a spreadsheet. Start today. Set a goal for your emergency fund. Commit to saving a specific amount each month. Investigate a new source of income. What skill can you monetize? Review your debts. Identify the ones with the highest interest rate and make a plan to pay them off. Get informed. Spend 15 minutes a day reading economic news from reliable sources. Your financial future is in your hands. Start building your resilience today and confidently navigate any challenge that comes your way.